The current live price for IBM common stock is 305.09 USD, showing a slight intraday climb of 0.17% as of late December 2025. While a fractional move might look like a quiet day for a legacy giant, it actually signals a fascinating tension in the market. Most investors see IBM as the steady, reliable dividend play, the old guard of computing that keeps your portfolio grounded while other tech names go through wild swings. But the reality is that IBM has outpaced a massive portion of the broader tech sector this year, surging over 35% and forcing even the most skeptical analysts to reconsider their math. If you thought this was still just a mainframe company waiting for the phone to ring, you are missing the massive institutional rotation happening right now. The expectation was that IBM would struggle as enterprise spending tightened, yet the reality shows a business that has effectively pivoted into the backbone of hybrid cloud and specialized AI for the world's most regulated industries. When we look at IBM stock in the context of other major movers like NVIDIA stock, Apple stock, or even Tesla stock, the narrative shifts. While the pure-play AI hardware names are fighting for every inch of growth at stretched multiples, IBM is quietly securing the unhyped part of the value chain, the consulting and software needed to actually make these systems work in a corporate setting. This is why we are seeing increased activity on investing sites and more retail interest on the Robinhood app. The market is realizing that boring is becoming the new alpha. Looking at the recent tape, we've seen consistent trading volume that suggests institutional accumulation rather than speculative retail fluff. On Fidelity Investments and Fidelity brokerage platforms, we're seeing IBM being held not just for that 2.2% yield, but as a core component of Fidelity ETFs that target high-quality recurring revenue. The intraday movement today, though modest, reflects a market that is waiting for the next major catalyst. We are currently sitting near a 52-week high of $324.90, and the fact that the price is holding these levels despite broader macroeconomic pressures is a testament to the company's improved balance sheet. If you are using Interactive Brokers or the Interactive Brokers trading platform, you'll notice the bid-ask spreads are incredibly tight right now, indicating a high level of liquidity and institutional conviction. One of the biggest surprises for those tracking online investing trends has been the resilience of IBM's software margins. While companies using a SoFi robo-advisor or SoFi active investing might be looking for the next big breakout, IBM has been doing the hard work of integrating acquisitions like Red Hat and HashiCorp. These aren't just line items, they are the engines driving a 10% growth in software revenue. Contrast that with the general expectation that IBM would be a victim of the cloud transition. Instead, they've become the Switzerland of the cloud, helping companies manage data across AWS, Azure, and their own on-premise servers. This hybrid strategy is precisely why Fidelity Wealth Management and other high-end advisory services are increasingly placing IBM in Fidelity IRAs and long-term individual brokerage accounts. The market sentiment is often a trailing indicator, and for IBM, the expectation of a slow-moving dinosaur is still being corrected by the reality of its cash flow. The company recently raised its free cash flow expectations to $13.5 billion for the year. For those managing their own online investment strategy or using Schwab Intelligent Portfolios, that kind of cash generation is a massive safety net. It allows IBM to continue its 30-year streak of dividend increases while still having the dry powder to acquire the next generation of data and AI companies. Comment below how many shares of IBM you currently hold or if you're waiting for a dip to $280 before you enter. When you look at the Robinhood stock trading interface or the Fidelity mobile app, the chart for IBM doesn't look like a typical tech stock. It looks more like a steady staircase. This is because the volatility that plagues names on the Robinhood app or SoFi trading platform is largely absent here. Institutional investors, the ones who move the needle, love this predictability. About 59% of IBM is held by institutions, and we've seen major players like Vanguard and BlackRock actually increasing their stakes in the most recent filings. This tells us that the smart money isn't just looking for growth, they are looking for stability in an era of high interest rates and geopolitical uncertainty. The business model itself has undergone a massive internal restructuring. IBM today is essentially a software and consulting business with a small hardware attachment. The software segment, which includes the hybrid platform and solutions, now accounts for the lion's share of the profit. This is a high-margin, recurring revenue model that looks more like Microsoft than it does the IBM of 20 years ago. When investors check investing sites for investment help, they often see IBM categorized as legacy IT, but that label is becoming obsolete. By focusing on Watson X, their enterprise AI platform, they are targeting the specific needs of banks, healthcare providers, and governments that cannot use open public AI models due to security concerns. For those of you doing self-investing on Interactive Brokers, it's worth noting the divergence between IBM's consulting and software arms. Consulting has seen a slight dip recently, which was the reality that tempered the expectation of a total blowout quarter. However, the reason for this dip is actually a long-term positive. Clients are shifting their budgets away from traditional IT consulting and towards long-term AI integration projects. These projects take longer to book as revenue but have a much longer tail and higher stickiness. This is the kind of detail that is often missed on standard investing sites but is crucial for anyone looking to invest online with a professional mindset. The macroeconomic landscape is the one area where expectation and reality are currently in a tug-of-war. The expectation is that if the Fed keeps rates higher for longer, tech spending will crater. The reality for IBM is that they provide mission-critical infrastructure. If a bank's mainframe or a logistics company's hybrid cloud goes down, their business stops. This makes IBM's revenue much more resilient to economic cycles than consumer-facing tech. Whether you are using a SoFi Invest account or a Fidelity trading platform, you have to ask yourself if you want a stock that is a bet on consumer confidence or a bet on the structural necessity of global data infrastructure. As we move towards 2026, the catalysts are lining up. Quantum computing is no longer a distant dream. IBM is already deploying 1,000-plus qubit systems and building the software ecosystem to support them. While this hasn't fully hit the bottom line yet, the expectation is that quantum will be the next major growth vector. The reality is that IBM is leading the patent race and the physical hardware race in this field. For those of you tracking SoFi ETFs or specialized Fidelity ETFs, keep an eye on how much exposure they are adding to these deep tech sectors. Another interesting angle is the company's approach to human capital. While other tech firms have had massive headline-grabbing layoffs, IBM has been much more surgical, using AI to automate internal roles and reskilling their workforce for consulting in the AI age. This reduces the lumpiness of their earnings and makes their margin expansion more sustainable. If you're looking at SoFi Investing or Robinhood Investments, you'll see that the companies with the most sustainable growth are often the ones that manage their internal efficiency as well as their external sales. The risks primarily are execution. IBM is in a crowded field, competing with the likes of Accenture in consulting and the big hyperscalers in cloud. The reality is that they don't have to beat Amazon or Google, they just need to be the preferred partner for the 80% of corporate data that still lives on-premise. This is their moat. It's a niche, but it's a multi-billion-dollar niche that provides a lot of investment help for those trying to diversify away from the high-beta NASDAQ names. To wrap this up, the contrast between what the market expects from IBM and what it is actually delivering has never been wider. The expectation of a slow, fading giant has been replaced by the reality of a high-margin, high-cash-flow software powerhouse that is leading the way in enterprise AI. We started with a live price of $305.09 USD, and while that might fluctuate by the time you're checking your Fidelity mobile app or Robinhood app today, the underlying fundamentals are the strongest they've been in a decade. We've explored the institutional shift, the software-led growth, and the strategic positioning that makes IBM a unique beast in the current market. The reality is that the world was looking at the flashiest AI names. IBM was building the pipes. This is a classic case of a stock that has been hidden in plain sight because of its historical baggage. But as the 2025 performance shows, that baggage has been dropped and the market is finally rewarding the transformation. The central insight here is that IBM has successfully decoupled itself from the old tech narrative. It is no longer a proxy for the PC market or traditional hardware. It is a play on the structural necessity of data management in a regulated world. The expectation that it would be a low-growth value trap has been thoroughly debunked by its recent price action and margin expansion. For the sophisticated investor using Interactive Brokers or Fidelity Wealth Management, IBM represents a bridge between high-growth tech and defensive value. Remember, the market often pays you for the gap between the general narrative and the actual data. Right now,